Hey there, traders. We've got a great video for you here today. We're going to talk about 3 option trades that are safe and there's some easy profits. And you're probably saying, well, options, safe, easy profits, they don't go together. Well, in this case, I think they're no-brainers, but you do your own research, but I'm going to show you what I'm doing, and we're going to cover why I'm doing it. So one is a CEO that's been in the spotlight and really taking advantage of AI right now. Another, a huge tech play where the stock is a great buy right now, in a position to go long with options. And the third one is, what was the third one? The third one is it's a huge semiconductor. I'll just tell you right now. So it's semiconductors. There's a trend with AI. So it's also in AI, but there's been a pullback in some of the semiconductor stocks. So this one is a huge player, and there's a great trade setup in this play as well. So whether you're a beginning trader or a seasoned trader, we've got something for you in this video. Before we get started, make sure you hit that like and subscribe button down below. Also, download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. As we kick off 2025, there's been some challenges and opportunities in the market and some extreme volatility that we can take advantage of. With major tech stocks like Microsoft and Salesforce riding the AI wave and semiconductors continuing their surge, it's crucial to approach these markets with some caution and strategies. In times of heightened volatility, safe trades become paramount. They allow us to capitalize on market movements while managing risk effectively. Today, we'll explore 3 strategies designed to navigate these turbulent waters: a credit spread on a leading CRM platform, a capital efficient play in the semiconductor space, and a defined risk trade on a tech giant. Now, guys, these stocks and strategies were chosen specifically for safety and to maximize profits and limit risk. So let's jump into the trades. Okay, guys, the first one is a put credit spread in CRM, Salesforce. The CEO, Mark Benioff, he's been heavily promoting their AI initiatives right now, and they are in a strong market position. Their AI integrations make an attractive target for this particular strategy. So we're on the Tasty Trade platform. We're going to punch in CRM right here in the upper left, and we are on the trade page and table mode. And I like to go about 30 days out. Here we're at 32 days to expiration. So the March 21st expiration option chain, we're going to click on and open up. Now, if you look right here, we've got earnings coming on 2/26 after the bell. I've got this set up in Tasty Trade. Great option trading platform. There's a link down below if you would like to check it out. There's some benefits if you go through my link. We've got puts on the right on the option chain, calls on the left. Before we jump in, though, let's take a look at some of the fundamentals. We click right here on Research News. You can see the income statement. You can see revenue in blue increasing as well as net income. And then the assets and liabilities, same situation. So great balance sheet. And look at here's the most impressive thing is the gross margin, 76.94%. So great business to be in. We also want to check out the chart right here on the left, and you can see I've got support at 310. Keep that 310 price in mind because that's where we're going to be setting our short strike. And my target is 400 for CRM, and it's trading at 326. So great time to go long. So let's go back to that trade page. Again, puts are on the right. Calls are on the left, but we're doing a put credit spread because we want the stock to go up. We think it will go up. So we'll go to the 310 strike right here, 32 delta. So that means 1 minus 32. There is, if we click on this, watch this, we'll sell it, and you can see there's a 71, should be 72 to go, a 71% chance of this being in the money, or what am I talking about? There's a 71% probability of profit. So we're going to click on that 310 and we collect $9.30. But then as protection, we're going to buy a $10 wide the 290 put as well for protection. So actually, nope, we're going to go $10 wide. So the 300. So we're $10 wide. Let me move this over. And we're collecting $3.12. So that's about a third the width of the strike. So one option contract controls 100 shares. So that's $312 that we collect as soon as we hit review and send. The max loss you can see is $688. So it's the 312. Well, it's the $10 minus the 312. 1,000 minus 312, 688. Our max profit is the 312 that we collect right when we place the trade. Now we can go to the curve mode, and you can see we are profitable all the way down to we keep the full profit, the full $300, $312, as long as we stay above that 310 strike price in the next 32 days. And remember, going back to the chart, we've got support down there, and we've got earnings coming out. I think they're going to be good, and it's going to move up. But you guys have to decide for yourself and do your own research. I'm just letting you know what I'm doing. And our max loss again is the 688. But you can see we're profitable down to 310 with max profit of $312. But our break even is actually that 310 strike minus $3.12. So that's right about here, right at the 307. So it's basically the 310 minus, yes. So if it's 310 minus $3 even, then the break even would be 307. So we can have the stock price move down and still make money. So we hit review and send and place the trade. All right. The next one, guys, is a semiconductor stock. It's MU, Micron Technology. Huge semiconductor stock. If we look at the chart, it's been trading in a range. We've got support down here at 85. Great buy right now. I've actually been doing really well in this stock. Actually, all these stocks that we're covering today. So they are proven to be safe, in my opinion, for me. What we're going to do is, let's look real quick. The financials super steady as well. The income statement and balance sheet. So let's go to the trade page. In this one, we're going to do a poor man's covered call. So we're going to buy a leaps option. So we're going to go out near a year. So we're going to go out 333 days to expiration. Open up the January 16th, 2026 chain. And this time we're going to buy on the call side. We're going to buy a call. And we're going to buy the 95 call right here for $22.45. So that's $2,245. And let's take a look. If we switch to curve mode, you can see as the stock price moves up, we make money just like similar to owning the stock outright, the 100 shares. So you can make huge gains with leaps options. But what we're going to do, go back to that table mode. Now that we've bought the call and it's in the money, the 95. Now let's close that up and let's sell a call against it 32 days out in March. So it's just after earnings, but we can sell the 105 call. So we get a 6% up move that we can collect on the option. So basically, if after earnings the price moves up, we're going to make money on that leaps. But if not, we click on the left on the bid, the sell, and we're going to sell this 105. And you can see we collect $405, $4.05. One option contract controls 100 shares. So $400. And you can see our cost now came down we subtract $400 and it's $17.47, which we're buying this for. So what we can do now is hit review and send and place the trade. But we make money in either direction. If the stock price goes down, then we collect this $405. If it goes up, we collect on the leaps. So this is a great strategy that I like to use. All right, guys, the last one is Microsoft. These guys are killing it as always, but you can see solid financials, income statement with revenue and income, and the balance sheet extremely solid, 69% gross margin. If we look at the chart, you can see it's been trading in a range. It's down below the 200 moving day average right now. And whenever you can buy Microsoft at this price and down like this, it should be a no-brainer. But I'm going to do another put credit spread, just like we did in CRM. And we don't have earnings coming out. Extremely safe. We can go 32 days out, and then we can sell the 405. I'm going to go right at the money, and then 395, and we'll collect $2.43. So $243 for this trade in 32 days. So this is a real safe play in my opinion. Hit review and send and place the trade. Let me know if you're which of these three trades you'd like to trade the most, which you think is the safest, in the comments below. All right, guys, be sure and hit like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer every one. Let me know which of these trades you're putting on right now. Thanks for watching. I'll see you in the next video.